Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody's having a great day. Looks like my microphone's a little hot this morning. Let me turn that down a bit. Okay. Hope everybody's having a great day. Hope you guys are all enjoying the wondrous month of December, as we are in December the 11th. Times are moving on, and we're seeing a little pullback in the markets. Not overly surprised that we're seeing a little pullback, right? We have a little pullback primarily because we got a new all-time high, and it's no surprise when the S&P gets a new all-time high, you typically see a pullback shortly thereafter. And sometimes it's a profit-taking pullback, but I'm going to look at the daily chart here. What we're seeing is a little bit of a couple of day pullback, not unexpected. And so I will be looking to identify good trading opportunities on pullbacks, looking for a bull pullback rally setup. Now, as far as our 4-hour time period goes, if I look at this, we do see that we've put in a slightly lower low. I'm going to throw the zigzag comparison on here real quick, and I don't have a new swing high or a swing low based on our zigzag percentage, but I can see certainly reasons to take a short if the market does indeed come back down. So what areas might we look at for a potential short? Well, if you want to take a short, a bit more aggressive to take a short, because we're certainly not hammering down as of yet, but we are down, 24 points this morning. If we get a rally today, you would probably look, your best area is going to be this area right up in here. Obviously, the pivot is going to be typically what your best area is, set from the overnight level. But I do agree, John, that momentum being somewhat down, we may not get a true opportunity to get in on this short. We might actually have to look for some sort of a candle-to-candle entry in this case. And a candle-to-candle entry would look like a reversal candlestick being created somewhere in this area. Somewhere in this area, a reversal candlestick being created would actually set up for a pretty good candle-to-candle area. So kind of consider this as a decent potential reversal point, but we don't have a good level to lean on, right? We don't have a super strong level in here in which to lean on, and so I don't want to, just jump ahead of it. Now, we are looking at the ESH21 contract here, so you do have to make sure that your contract is correct. If we were just still on the Z20, it's going to look like a slightly different number, but we're on the H21, and I just stitched them together, right? We just use the /ES here on Thinkorswim, and it just stitches those contracts together. So those are the levels that I'm looking at, as far as the highest probabilities for reversals. So, well, I will tell you, our rule is I want to be out of pretty much everything by the end of the day because we're heading into the weekend, right? Anytime we're heading into the weekend, unless you have some sort of a hedge position in place, I'm going to want to be out of it by the end of the day on a Friday anyway, right? But certainly we're going to want to close these contracts out. So looking at the NQ. Now, the NQ today, we are down about a little more than 0.5%. So both of them are down 0.66%. NQ as well, also down. Did come close to this area of demand yesterday. When I look at the demand areas, I believe that we're going to have to come down to a 4-hour demand zone, and I don't know that this is going to be strong enough to hold. So on the 1 hour, that demand area that we have in here, 1 hour, which is a pretty decent little level. It's a wick over wick above a pivot low. We came really close to it yesterday, and we were unable to get that contract executed. Gave a decent move away. So I'm going to remove it at this point. I normally would turn it into a confirmation. But just with that 240 momentum, I think it makes more sense to kind of remove that position altogether. So the next level above, as I take a look at it on the hourly chart, is this one right here. Right? Very similar to the S&P in that picture that we're looking at the pivot. We could see a candle-to-candle reversal somewhere before that. If I look at this one on the 4-hour and I throw in my zigzag, I do see a lower swing high on this one, but has not yet been able to put in a lower swing low. So we'd have to see if we get lower than this low here. Now we've got a significantly stronger downward trend in which to lean on. Next would be the Russell. So looking here at the Russell 2000, down a little bit more today than the other two markets. It's down a full percent this morning. Didn't quite get us a new all-time high, whereas my other two markets gave me a new all-time high this week. I did not get it in the Russell. The Russell came, on the most recent move. It had a stronger move down after that big move, after that high. And so I'm looking here at a weekly chart, right? We're looking for the longer-term picture. And looking at the longer-term picture, I still believe, and this was our price target from the fib extension a while ago, I still think that when I look at the NASDAQ, that's where we're heading. Looking at the Russell, though, we had a much bigger move away, right? Much bigger move away. Looking at the bigger picture here on the Russell, look at that reversal candlestick. Okay, I'm going back. NASDAQ on the weekly, right? NASDAQ on the weekly, kind of a red candle, nice move up. But the Russell on the weekly, that is a really nice. If we stay in that shape, wow, is that a strong reversal candlestick. Now, typically that would give us an opportunity for a candle-to-candle short on a pullback, and I think it's very possible that we could pull back into this 1750 range. I think 1750 is a really nice opportunity on a deeper pullback on this one. And so how would I get there? Well, we would get there because of a breakdown. And the first and most obvious breakdown to me is this 1810 level. So we're going out a little bit further in time here. But this 1810 level is the one that I would look at first. Below that, you then have, I think, clean air for price to move down to this region. If we are going to stall, we would stall at one of these areas of demand. Now, I've got another area of potential breakdown right here at 1875. So I'm looking at this one more for potential breakdowns than I am the other two markets. And I think that, if we're going to go down, this would be the first one to do so. And if we break below 1875, then all of these 15-minute demand areas, they're still valid. They just become valid for smaller time frame trading and as confirmation entries only. Okay, any questions or thoughts on the Russell? Let's move over to the Dow. Looking here at the Dow Jones, we have a little bit of basing right before a potential area for a breakdown. So this is the level that we've actually had our line in here for a while. So we're going to keep that line very much in place, which is 29,604, with supply up here at 29,904 by 29,954. I think those are all really clean levels. I think from a technical perspective, the Dow is actually the cleanest of all of our markets. So from a pure technical perspective, the Dow becomes the cleanest of all of our markets, the one where we would see probably the best reversal opportunities. So I forgot to do my shameless plea in the beginning of the video today. If you're watching the video, do me a favor, click the like button on your YouTube thing. That helps the computers to know that people are actually watching and paying attention. And if you are a regular viewer, hit the share button and share the link for this video out on your social media feeds. It means a lot. All right. Thank you for that, y'all. Thank you for that. All right, let's go to energies and metals. So looking here at our energies and metals, starting with crude oil, and I did not have a DMC yesterday, and Justin did the live trade room, so there were a couple of things that were moving off of that level. Good morning, Paul. How's Hotlanta this morning? All right, so looking at CL on our 4-hour chart, we have a clear uptrend. We broke out of this sideways kind of price action that we had there for a while, and now when I move into the 1-hour position, well, we try, John. We can't let the Europeans bring us down all the time. I'm just kidding. Crude oil 45.88 by 45.68. I think is a pretty good level. This one's here is a bit more obvious, right? This is a bit more obvious right in here. And sometimes those more obvious levels kind of bite you. But, this is to me a bit of a level on top of a level. And so I'm going to make this a confirmation entry and the one below it a limit entry. Freezing Jersey. I will tell you, New Jersey is cold this time of year. I do not miss living in that part of the United States at all. Not one. And I love you, man, but I don't miss living in New Jersey at all. Between the freezing and the traffic and the snow, you guys can have it. And the football teams. I got to tell you, Jets and Giants, whew, it's been a rough year. Mr. Street, what's up, Billy? All right, next, gold. So looking here at gold. Gold we have, I left some lines on gold from our prior sessions, even though I took some off the other markets because we didn't have a session yesterday. But gold had a pretty good breakdown opportunity. Didn't really give us a super clean move right away, but it did eventually drop. Oh, that's a good point. I almost forgot about the lovely property taxes, Liz. Price did hit the hourly level, moved away about 2 to 1, and then came back into our next level and kind of chopped around and did. So my point behind showing all this is that we hit some demand and went basically nowhere, right? We hit demand, Jersey for life. That's awesome. We hit demand and went basically nowhere. So what does that tell us about the momentum for gold? Matter of fact, just looking at this, what does this price action look like to you? Right? When I look at this price action, I'm immediately removing this area of demand. And this price action to me looks like we have a strong breakdown. Yeah, potential on even a head and shoulders pattern. Now, we're on a 4-hour chart. On a 4-hour chart, we would take a look and say, well, we were in a nice 4-hour upward trend, but we're showing some weakness inside of this upward trend. And a break below 1824 would confirm that weakness in the upward trend as well as that indecision. And so what I would say is that the best thing we can do is get breakdowns below this 1824. What happens if we get some sort of a gap down on this thing on Sunday evening? What happens if we get a gap down on this on Sunday evening? This one's already on my short list for Sunday night. Okay? If this gaps down on Sunday night outside of the prior day's range in the direction of the predominant trend, this then sets up for a gap and go situation. And it could be a better mover for price to gap and go out of this level. And I think that is something that is a very undervalued setup, is the gap and go over a weekend. So I'm going to keep this on my short list for the gap and go trade over the weekend, and I think that could be a setup. Do I think we're going to get the short today? No, I don't. If we do, all the better, but I would still need the basing. But the only way I can get short below here without basing is if we gap and go below there, and then that's kind of confirming our downward trend. Natural gas, also one that I typically pay a lot of attention to in terms of gap and go setups. Now, remember, we said that we didn't really believe in the gap fill trade, right? And that's why we didn't. Price just popped right through it and then kind of went nowhere. And so, yeah, it definitely does seem to be forming that head and shoulders pattern. But when we think about a head and shoulders is essentially nothing more than a shoulder, head, shoulder. It's the changing of trend direction on the bigger time period. That's really all it is. And so I agree that it does appear to be forming that head and shoulders setup. Natural gas, I don't have anything to add to our levels for today. We've not really been getting a lot of great movement out of the nat gas this week. And so I'm going to hold off just a little bit. Copper, we broke above the level in copper. And if you took the breakout trade because you considered this to be your basing area, well, then, okay, you got a little move away, but after about 6 or 7 candles, you realized it was going nowhere. So not a great trade to take the breakout. If you didn't take the breakout and you said, well, let's trade the retest because we had a little retest of that level. Well, 6 candles later, it went a whole heck of a lot of nowhere. And so what we're seeing here is a combination of going a whole heck of a lot of nowhere in the midst of a 4-hour chart that's showing me momentum is slowing down. My question is this just a rest of the uptrend, or is it a thrust higher before our next move, right? Something tells me, based upon the fact that we are unable to sustain new highs, that we're going to come down from here. But I don't know that until we get a lower low, right? I don't have a lower low as of yet to lean on. So for now, I'm not going to trade anything. Yeah, Dennis talking about the target. That is correct. So when we measure a head and shoulders target, we typically take the hold on, let me pull this up here. When we take a head and shoulders target, what we typically want to do is identify where is that head and shoulders, right? So we have a shoulder, head, shoulder, right? That's where our head and shoulders would be. And then let me make this a bit thicker so it's easier to see. Shoulder, head, shoulder. And then you take the measurement from the top of the head to the neckline, and that distance is typically going to be how far you would expect price to move coming down out of this level once we get below that line, right? So that distance from there to there is about there. Now I can draw it out better with the charting software, but for people to kind of see what it is. Target is the knees and the toes. I like that. Head, shoulders, knees, and toes. Thanks for putting that in my head all day, Trent. You owe me. You owe me, pal. All right. So it would be right down here at about this 1767 area would be the amount. I get such bad earworms now, and I hear the song Head, Shoulders, Knees, and Toes, 84 times a day since I have an 6-month-old. No, not a dumb joke. Good joke. That's why I love you, man. All right. Dad joke. They rule. All right, let me share this grid here real quick. Oh, I forgot to share the equities one. Let me go back into the trade updates here and set this up. All right, let me pop back into equities here real quick. All right. So next, let's look at our ags here real quick. And looking at our ags, we have in our ZS, our soy position, we had taken a look at an area up here that it kind of popped through yesterday. So now I don't really have a whole lot. I mean, this is the obvious move down. I don't have a whole lot to really lean on here. Good supply up above if we look at this region up here. Really nice supply up there, actually. That's a pretty clean little level. This area is the origin of a very strong move down, and so you have to always consider that. But I've seen oftentimes levels like this, especially when they're created on some sort of a news announcement, get blown through, and so I don't know that I'm going to add that. And then corn, nothing really to add. Level of breakdown still exists. My area up above, this is pretty clean, but I don't love the time of day. But we will have that in place. Wheat has rallied up to the 15-minute level up here. Now, if you happen to get in on this 15-minute level, the downside of this 15-minute level is your target's got to be just in front of this 600.86 area. So you don't have a huge move that's going to happen out of here, but it's, based upon the size of this zone, your stop would be Your stop technically has to be up here above 609, so you may or may not have enough reward to risk to make this one make a whole lot of sense. Still gives you a right at about a 2-to-1. Right at about a 2-to-1, it's still offering. So if you wanted to give that one a go, it is still running. And then bean oil. So looking at bean oil, we got a supply level up above here that's not been touched. So really in agriculturals, we're kind of in between a bunch of levels. I don't think it's a great day to be trading these ones. I don't see a whole lot out there in the ags. Let me take a look at currencies real quick. And actually in bonds, we're in a supply level now. Coming out of our supply level on the ZN. This was the level we had identified a couple of days ago. And in this ZN position, we have rallied back up to it, but your target has to be right here, right? Your first target's always going to have to be right at the opposing level. And in this case, our opposing level is fairly close. So keeping that opposing level fairly close, I would want to get out of my short somewhere just in front of this area. Not giving me a lot of great opportunity, right? If you took the short, 1, 2, 3, 4, you're 5 candles into your 6 candle rule. So for now, I need to remove it in general. I think that, the chances of it coming back down to there are a little bit smaller, especially since we've not really moved since entering the position. And now we're in a bit more of an upward trend, right? If I look at the swing highs and swing lows, we can see that we've created a new upward trend and a new high. So if we do pull back from there and we make it to our profit target, this is one of the few times that I think it makes sense to say, okay, get out of the short and then opportunities to go long. Somebody asked me yesterday, he said, do you guys give training on how to use the reverse button? And I said, yes, ignore it. And I'm not saying to use the reverse button. You still want to take a look at the level and make sure that it makes sense. The reverse button, I'm pretty sure, is the devil. Bobby Boucher's mommy would call it the devil. Did the devil, Bobby? All right. Nothing really on the ZB to add, outside of what we talked about on the 10-year. Now, the euro. So in our euro position, we gapped up yesterday and then popped above our breakout line. Now, if you took the breakout trade, you didn't get anywhere. 1, 2, 3, 4, 5, 6 candles later, the market had gone nowhere. It told you move your stop to break even and get the heck out of Dodge. Now, we did come back to, that reverse button's a good one. We did come back to the gap fill level. Now, I don't like gap fills in the world of futures unless it's a contract rollover gap. I see those work significantly more frequently. Now, we have come back to the level, but we've not really gone anywhere off of that level, okay? Yeah, very low volume, Jersey Trader. This is one of those weeks, it's starting to get to the time of year where I know a lot of really good traders that just take off the whole month of December. They just take off the whole month of December. I know some that take off the last 2 weeks of December. So it's up to you and your risk tolerance, but that's oftentimes due to the lack of volume. So now, in looking at this on a 4-hour chart, I feel like we are still heading up. Our bullish momentum is continuing, but let's take a look real quick at the dollar. And the reason I want to look at the dollar is because everything's been going up because the dollar had been going down. And the dollar was going down in search of this area of demand that we have right here. Well, this is the first week that we've seen a little bit of bullishness in the dollar. Do we believe that bullishness to be long-lasting? We'll see. I don't know that I do, right? But with this area of resistance sitting up here in the dollar, if we can't get through that, the dollar's then going to continue to fall. If we do get through it, I think we see the dollar rise up into 91.75, and you've got then a lot of short currency opportunities. Oh, Dennis, trading water futures. It's good. That's good. I like it. So for now, I don't have a whole lot that I want to do on the currencies because I feel like we're kind of in a stall point in between trends. We put in a little bit of a double top pattern here in the Canadian dollar. Now, by the way, notice, no basing before the level. So was that a breakout? No. Second breakout, no basing before the level. Not a breakout. However, set up a really nice double top, right? That's a strong double topping pattern. And our double top pattern, when you use the double top pattern, your measured move is from the top of it to the bottom here. So you'd anticipate price coming back down to about this range. Well, notice, lo and behold, what do we have at about this range? We've got some areas of demand. Now, why would that area of demand be bolstered by the double top pattern? Because if enough people use the same analysis and they place their orders at the same spots, then that double top pattern becomes a bit of a self-fulfilling prophecy for the demand level down below. Justin is like the ninja of puns. He can get after it. Although I will say my favorite is still corn futures are popping. That's still my absolute favorite. The popping of corn futures is legendary. Oops. Typing in the... All right, so let's move on to the last currencies page. And moving over to the last currencies page, we're looking at the New Zealand dollar, the Great British Pound, Japanese yen, and the Australian dollar. So the New Zealand dollar, we didn't get truly quality basing. We did pop above, but then price went absolutely nowhere after 6 candles, telling us, okay, we should probably get out. Well, now I think the better chance is the price actually comes down from this region. I think that we got a better chance for price to come down. However, on our 4-hour, our trend is still up. So I think that we're seeing a lot of slowing momentum. I think if the dollar can show some strength, that the New Zealand dollar actually may be the one that comes down the fastest, because you've got some clean air here to lean on. That being said, I just don't have a trade set up as of yet. Okay? Does anybody, I mean, I don't want you guys to feel like I don't want you guys to feel like I'm chickening out of some of these positions, but I just don't want to force a trade when one's not there. Great British Pound, obviously not a breakout trade. Absolutely no basing happened around this area. This is just a straight move down. On that straight move down, we have to say, okay, where's the chance to get back in on a retest? Well, by now, those of you that are regular viewers, your eyes should immediately go to this wick over wick below the pivot low, or below the pivot high. Wick over wick below a pivot high, that's our turning point if price returns back into there for price to come back down. I don't know that we're going to make it all that way up to there, frankly, with this downward strength and momentum. And so you might get an entry right here off of the 15-minute time period as well. Yeah, well, Brexit will happen eventually. We'll see. Japanese yen, we had a demand level. Price hit the demand area. It gave us a little bounce away and then just kind of stalled out without really going anywhere. And then we got our big move. Now, gap fill area here. So I talk about the fact that rollover gaps do mean something to me. So I'm going to just leave that area there. That's the only one I've got. And then on our Australian dollar, we'd had a little bit of a demand area in here from Wednesday. Price popped a little bit through that zone and then went higher. You know, just to really stick it to the man, as they say. Price came just a little bit below there and then reversed and went a bit higher. I would look at this area here as kind of the next place for price to reverse. Old resistance oftentimes acts as new support. I think that would be where I'd look for price to reverse. It's just not got a pattern to lean on yet. So I would look for a candle-to-candle reversal at this level unless we get basing for some sort of a move down. But I don't think that's going to happen today. All right. Yeah, no big deal yet again. All right, so I'm going to share this one out. Now, as far as today goes, I don't know if you guys can see the enthusiasm in my voice for all of the amazing trades today. Do you guys see can you hear? I guess I forgot to turn my camera on today. Can you hear the enthusiasm in my voice for all of the great trades that we have lined up for today? You guys hear all that? Please tell me that you do. You hear all that great enthusiasm. I don't feel like you need to force it today. Right? There's no reason to force a trade. You are not 10 feet tall, nor are you bulletproof. Today's not the day to try to think you are and try to outsmart the market. Go Christmas shopping. I like whiskey, in case anybody's wondering. I enjoy a whiskey. I don't have bourbon is my preferred choice, but I am not picky. I'm just saying. So, all right, everybody. Well, that's all I've got for today. I appreciate you joining me as always. Once again, you guys mean a lot. Thank you for coming in and letting us talk the markets and talk trading this morning. For those of you that are Traders Army members, Sunday night, we will have some good trading set up. I think we could be setting up for some decent trading Sunday evening because it's usually what happens. You get a couple of yawn days, and then, speaking of yawn, and then Sunday night sets up for pretty good movement. I know some of you are joining us tomorrow for the trade plan class, so I look forward to having you in the trade plan class tomorrow. Corey and I are going to do that class together. If you guys are interested in learning more about that stuff, go to tradersarmy.com today. We would love to have you join us as a member and see what we're all about. So, all right, everybody, thanks so much. Talk to you soon. Have a great day. See ya.